Welcome to the Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place. Here to challenge you to think out of the box, your hosts, Felipe Mejia and Diego Corzo.
Diego, what's up, man? I know you're coming all the way from Puerto Rico for today's episode.
Yes, sir. How are you, Felipe?
Dude, I'm doing really good, really good. I just got my personal residence under contract. I'm 32 or something. I've been investing for 6 years, and I'm finally buying my personal residence. I think you're getting yours as well soon. But that's not what we're here to talk about. We have Mandy today. She is awesome. She's in GoBundance. She's a single mom. She's crushing it. She did small multifamily, and now she's doing syndications. She dropped some huge bombs in this podcast and a really big one at the very end. So make sure you listen all the way through.
Yeah. And one of my favorite ones was how she had, once she reached financial independence, how she had the choice to quit her job whenever she realized that something happened, that she wasn't happy anymore. And then that is the point where some people will think like, oh, I cannot leave this because I won't be able to feed my kids. Well, for her, she was able to say, you know what, I don't need this, I'm out. And so hearing her story behind it was really cool.
Dude, I agree 100%. Having that option is powerful because now you can decide whether you're going to have a good day or a bad day. And there is so much value in that. She's like, you know what? I'm going to quit and I'm going to have a great day versus this could have been a bad day. So I think that's awesome. She did drop one more huge nugget that I'm going to go ahead and give away. And she was talking about finding property managers to help you find the deal. That's huge because then you can get a property manager. You know what? I'm going to let Mandy explain it. But before we get started, let's hear something really quick from our sponsor. So Diego, I'm going to go ahead and say it. Over at REI Call Center, if you're a realtor or a wholesaler and you need a cold caller to help you stay ahead of the game or top of mind when people are going to sell, buy, or get rid of a property, REI Call Center will give you an amazing cold caller to really further your business. All right, guys, let's get started. Welcome to the Rat Race to 5 podcast. I'm really excited that you're here, and I got my co-host Diego, who's in Puerto Rico, living it up. He looks a little tan even just on the screen, so I'm sure he's getting some sun. Mandy, tell us a little bit about yourself. Who are you? What do you do? All the goods.
Oh, hi. I am Mandy McAllister. I am a small multi-investor, single mama out of the south suburbs of Chicago. I, for 16-ish years, was in medical device sales, chasing doctors around to support cases. And just 4 months ago, decided that I'd hit my FI number. So it's time to give it a go doing real estate investment full time. So I'm a full-time investor these days.
So you're a full-time investor, mommy, coach. There's a lot of stuff on your Instagram. I actually loved seeing it the other day. You were nominated by Kayla to get you on the show, so we were super excited to have you. But Mandy, tell us a little bit more about yourself, high school and college days. Let's take it back because something made you into a real estate investor. I don't know about you, but I didn't grow up. I was like, oh my gosh, I can't wait to buy houses and fix toilets and manage people and all this. That wasn't where it came for me. But tell us about you. What were you like in high school and college?
I love toilets. No, I grew up on a farm. So if you guys ever need to bale hay, I've got you. So my parents were both self-employed because it's, farming, whatever, that entrepreneurial gene. I guess I was kind of born with it. When I was 12 years old, I started sewing scrunchies and selling them to the local cheerleading squads and volleyball teams. But, because there was no internet back then, right? And you want to have a matching scrunchie, and it just blows my mind that scrunchies are back, but whatever. And I made a couple $1,000s in that summer, and it was just kind of got bit by the bug. And then ended up playing volleyball in college. And the last Division I scholarship that was left after I hurt my knee was a little school in Georgia called Mercer. So I followed volleyball down there. And when I was 19 years old, I remember being on a porch of some house at a party of friends. And she was explaining to me that her dad bought the house and that she rented the rooms to our friends. And I'm like, and you get to keep that money? That is the best idea I've ever heard in my whole life.
That's funny.
So, that plus, then I had a couple of really strong entrepreneurial lady landlords for my next couple of rentals that I was kind of bit by the bug pretty early on.
Interesting. So going into college and stuff, you already knew like what you might want to be doing?
I thought I was going to go to medical school actually out of high school. Because I mean, if you're a smart, if you're the same 26 kids I went to kindergarten with are the same 26 kids that I graduated high school with. If you want to like the better scores, like you're supposed to be a doctor or a lawyer, right? So actually in college ended up having a conversation with a cardiologist that, oh, you're going to be on call with this beeper and you're going to hate it. So you better love medicine if you're going to go through with medical school or get out now. And actually, like the week after that conversation, I switched to the business school and ended up with a master's in economics instead of a medical degree. But a big time punchline to my life is that, I made that life choice at like 20 to not go into medicine because I didn't want to be on call. And then I end up in sales in the business side of medicine. And you guys, I was on call from a sales job. Isn't that like the universe just giggling at me? Yeah.
Oh man.
So you think you have your own plans? Here's the beeper.
Yeah, right.
On that sales, so from what I understand, on the sales side, when you're selling to hospitals and all of that stuff, it's like the salary or the commission base that you can make is actually pretty good, correct?
It's good money. But the thing is, if let's say your quota this year is $1 million and you sell $2 million, you get a really nice reward that year. But then next year, to make that base pay instead of that multiple pay, you now have to sell $2 million because you proved you could do it. And you end up really kind of chasing your tail. Chasing commission is what I always called it.
Dude, I would purposely like sell just enough to where I'm comfortable next year.
You're a sandbagger. That's what we call that.
That's what I would do.
Dude, so that's like the rat race, right? Like they built upon your rat race even more, even on that commission. It's like, hey, you're going to run the rat race, but you get to build what it looks like for next year. That's really interesting. So you had 14 years of creating your rat race.
Based on my tail. Yep. So my first job out of grad school was the board of trade. So my dad farms plus master's in economics equals board of trade, right? And it seemed super obvious that the pits were going to be going away. So then that's, 4 or 5 years in, I switched to medical device sales. So it, the industry itself kind of changed in terms of how they compensated their reps over the course of my 16-year stay in medical sales. But it again became very obvious that they're really getting pushed down those comp plans. And in order to have choice in my life, and I actually had a boss like tell me to do something that was like ethically questionable in terms of growing my sales. And I was in a position that I knew my mortgage would be paid and my kid would be fed because of my passive income. So that I felt safe to say, no, bro, I'm not doing that.
So Diego, isn't it like that as a realtor as well, though? Like, there's not like a rule that you have to sell more houses than you did last year, but like mindset wise, isn't that where a lot of realtors are? Like, they're like, oh, I got to do better than I did last year. I think I've even heard you say something like that.
Yeah, no, for sure. I mean, it's like sort of like you want to grow and you want to continue growing. And this is the first year personally that I didn't sell more than I did last year. But it was a personal choice. Because I'm competitive in this sense, I know that if I did want to, I could have probably sold 80 houses, but I made the choice not to. But it's good. Yeah, I totally agree with you, Felipe. It's sort of that, how can you continue growing?
Right. Okay, so Mandy, so you were in medical sales. Did you play sports in college? Did you do anything else in college that was interesting?
I mean, I played volleyball and my recruiting class, get this. So I guess it was a real common name in the 80s, but I'm Mandy, Amanda, right? So my recruiting class was 4 girls. So Amanda, and Amy. We call ourselves the A team. We still get together with our kids. It's super fun.
Oh, that's
but
hilarious.
I was in a sorority too. And I don't know, I always like to be in charge. So I ended up, heading some committees with that in the Panhellenic, whatever. So I'm always an involved person.
You're always involved. I love it. Okay, so medical sales pays really well. Why did you decide to stop and do more real estate? Like, what was the transitional period? What was the wake up moment? I feel like everyone has that. I like to call it your toilet bowl story. I don't know if you've listened to Brandon Turner's podcast when he he talks a lot about his toilet bowl story where he was changing a toilet or something in one of his rentals. He was a millionaire, cash flowing like $8,000 or $9,000 a month. And he like looked up one day and he was changing a toilet at 2 a.m. at one of his rentals. And he literally just stopped and was like, I'm never going to do this again. I am going to put systems, processes, and procedures in place so that I never have to change another toilet in my life. And he said that's where his exponential growth started, where he started hiring and marketing the right people. So do you have a story like that, Mandy?
I have a couple actually, and I guess I can't learn a lesson the first time. So the universe keeps giving me things so that I learn the lesson. Well, the first one, my son was born in 2016 and I was working 12 or 13-hour days. And I realized like, oh my God, this is unsustainable. I'm not spending time with my kid. Like, why do you have a kid if not to spend time with your kid? Well, I won the President's Club and I got all these awards and big trips and whatever. And then I realized like, no, this is not the path I want to go. Right. So I kind of downsized a territory. I took a different territory thinking like, ooh, this will fix all my problems. If I'm not hustling, driving around as much, this will fix that problem. Well, in that transition, that boss kind of asked me to do that, ethically not cool thing. And I was sitting, story number 2 now, I was sitting in a parking deck and I couldn't I couldn't breathe. Right. Like, cause I wasn't hitting my quota because I had that President's Club year. And now in order to, just hit the number that they'd given me, I have to double again. Right. So it was in that moment that basically this boss is telling me you have to do this because you need to hit your number. You're not hitting your number because you won't do this. And I had this like kind of panic attack. I think probably clinically it was a panic attack. And then I realized, oh my gosh, I have enough passive income that I'm not going to be the, single mom under the bridge, not able to feed my kid. Like, I'm going to pay the mortgage and we're going to eat ramen, but we're going to live because of this passive income. Where does my attention really need to go on the thing that's growing my life and is sustainable and is actual job security, or the thing where this questionable boss is pushing me to do something that I'm not cool with? So that really, that was probably 2018. And I doubled down on my efforts on multifamily investing and went from, able to cover my mortgage to financial independence in just, 3 or 4 more years.
So there's a lot to unpack there. That's the story we wanted, right? Like that's I feel like a lot of people have, and I'll jump into digging into this story a little bit more, but I feel like a lot of investors have that moment, right? That panic attack moment, I guess I'll call it for the sake of this interview, where it's like a pivot point. That real estate is sustainable. You have the guts and glory to do it. You're in a place right now where you're not, doing it. And then someone tells you to do something unethical, or you're not hitting your numbers. And then you have this light bulb moment, this panic attack moment where you're like, I'm going to double down on real estate. And I have yet to find that person that didn't say it was worth it for them. A lot of people talk about like, oh, the crazy uncle who lost their shirt in real estate story. I've never had that. And honestly, I'm going to be 100% honest on this podcast. I've never heard that. I've never heard someone tell me like, yo, you shouldn't do real estate because this. Now, I've had obstacles and tribulations to get into real estate, but I've never had someone tell me that it's like bad or that they lost their shirt, or that they shouldn't have done it. And every person that I've talked to about real estate is like, dude, I wish I would have started sooner. Everyone talks about that. So in 2018, you doubled down on multifamily. How did you fund your deals? How did you find them? Tell us how the journey began. Like, how did it start out for you to get into multifamily?
So right out of the gate, I jumped into small multis. So like I was bit by the bug at 19. And then in 2008, I bought a condo in Chicago that I had planned to burr. Like, oh, everything's going out. Like we're in the correction now and this is going to appreciate so much. Refinance into something else and have a renter in this one. Well, we weren't all the way to the bottom in 2008. So I didn't for express purpose buy anything for investment until 2016. And that was a fourplex. It was $120,000 that I was scared out of my mind to buy. I was scared out of my mind. And I got a 30-year fixed loan on it. And, someone who'd been doing it a long time, I talked to him about the deal and he's like, yeah, that's a good deal. I'm like, someone who knows what they're doing thinks that I know what I'm doing. So then I pulled the trigger on that one. And not only did I not die after I bought that first fourplex at the beginning of 2016, it was cash flowing like $800 a month. So like that was a really good first start. So after I acquired that one, I bought a sixplex, and then I bought into a syndication, and then I realized, oh wow, like you can run out of capital pretty quickly, but I can just leverage the equity in this other stuff in order to get into other assets. So that's really kind of how I started, because I would rather that my choice was, rather than get into syndication where I leverage other people's money and own a very tiny little portion of a bigger deal, then have this floor of earnings that's just mine. If it's my portfolio or a joint venture, me and a partner. So that floor of earnings really kind of made it so that I could swing for the fences.
So you went from a fourplex to a sixplex to then starting to put some money into syndication deals. What was the process of from multifamily? So in your story, you said earlier that like buying that first fourplex was the scariest thing. And then I want to move on after that, but I do want to ask this. What would you tell someone that's in that position right now? That's like Mandy back in 16, what would you tell yourself now that you were so scared to buy that fourplex? And I'm sure you're super glad you did, but what would you tell yourself, and what would you tell other people that are in the position listening to you tell this story? They're like, hey, I want to do the same thing, but I'm kind of scared.
So HP did a study of people looking to get promoted in their business, and men felt like that they needed to have 50 or 60% of the qualifications to go apply for that promotion. Women felt like they needed to have 100% of everything in order to even just apply for that promotion. So women have this feeling, largely, not everybody, but just largely, that we have to have it all together and have the answer to every last thing in order to go try anything new. The thing I would tell myself is you're gonna have to let go of the branch at some point. That 80% of anything you do is your mindset. 20% is the mechanics. If you understand those mechanics of what you're doing, if you understand what an NOI is and an IRR is, and that you're gonna get the returns that you're gonna get, like you got to let go of the branch and see if you're going to fly. And the thing that helped me feel comfortable around that was not just, oh, what if the toilet breaks and I have to be at 2 a.m. Brandon Turnering because whatever. It's the actual worst case scenario. Get really stoic philosophy granular about the worst case scenario that, the worst case scenario is that this vacancy break even is 40% or whatever that is. And if you can get comfortable with that downside, mitigate the risk of that actual worst case scenario, then it's a no-brainer in order to move forward.
I like that. 80% mindset, 20% mechanics. That's really smart.
Question for you, Mandy. On your first deal on that quadplex, did you fund it putting 20, 25% down? Did you use private money, conventional loans? How did you fund that?
It was $120,000. So I put 25% down and used just a conventional residential type loan. Okay. So it wasn't, I had some savings. I had a good job that I socked away a bunch of cash, but all in, $120,000, it was, I don't know, 30K everything in order to furnish the student rental.
Awesome. And how did you find this first one you said?
A thing that I did accidentally. This was an accidental mistake, and actually I teach classes on because it worked out so well, and I've seen it work out well subsequent to my own experience. I figured out what market I wanted to be in. I figured out the type of thing I wanted to do. I made a really kind of laser focused decision. And then I found a property manager who was doing exactly what I wanted to do. And I didn't realize it at the time, but property managers in most states, you have to have a real estate license in order to be a property manager. hey, do you know anybody who's going to be wanting to sell? Can you help me? I want to use you as my property manager. Can you help me find a 4, 5, 6-plex that I'll be able to go after? And they're double incented because one, they get my property management business, and two, they get the buy side of that commission in order to help me purchase it. So partnering with a property management firm up front is how I did it, and I think is an excellent strategy moving forward.
That's a really good comment. I don't think I've heard of that one. And I know it makes sense. I always tell the members over at Rat Race to FI that before they buy a property out of state, make sure that there's a property management company that will manage it and that or that already does manage that property, which is a great a great indicator that it'll be fine. But I never would have thought about maybe if you're going to find a property out of state and you know the market you want to be in, start with the property management company and find out if any one of them are going to want to sell. Because you're right, as investors, and if we have a property manager, the first person we tell that we're going to sell is probably our property manager. Like, hey, I'm interested in selling this property. Let's make sure that it's vacant, yada, yada, yada. So that's actually a really good strategy. I like that. I'm actually going to have to write that down and tell my members later.
Yeah. And what's good about that one too is that like you also get the correct information of like how many repairs they had, like when was the last time that maybe the AC was serviced, all of that, because they are tracking that. If they're a good property management company, they have receipts, the payroll, the rent roll, all of that. So yeah, that's a no-brainer.
I feel like in terms of underwriting, in terms of acquisition, the thing that I kind of harp on is you've got to figure out how to put the most truth to the problem. And if you, just like you said, Diego, if you're going to the source of how it's been managed, you get the most truth possible.
I agree 100%. So you got the first 4-plex, then you bought a 6-plex. Tell us your mindset shift into syndications. Why did you do that? Why didn't you continue to grow slow and boring like most of us do with real estate? What was the jump to syndications?
Well, I was a passive investor in the syndication. In terms of, I knew I wanted to go bigger and potentially leverage other people's money. And in order to, the reason why is the type of debt that you can get on larger multifamily properties. Well, I always call it the black hole of financing in small multis. You're going to do a 4-unit or smaller. You can get that normal, really good 30-year fixed residential type loan. Or if you're going to borrow $1 million, you can get government backed, super low rate, longer term, lots of interest only, non-recourse debt. Non-recourse means I'm not personally liable if everything all hits the fan, right? But there's this kind of black hole in the middle. So I bought the 6-plex. It was in that black hole of lending. I could only get a 5-year term loan. It was a much higher rate. Lots of prepayment penalty, no interest only, all kinds of not great stuff. So I knew I wanted to chase the bigger stuff. And in order to do that, you have to have a resume. And I had self-directed IRA funds and a friend that was putting together a deal. I loved the business plan. So I went in on it. And to this day, I feel like I prefer passive investment in syndication to being the active person in syndication, because, that's where all the money is made, is with the people who have the money in the deal. 70 to 80% of the returns go to the people with the money.
So tell us more about the syndication, because people are going to be interested. Can you give us the nuts and bolts of the deal? What's the return? What's the position? Like, can you give us some sauce on that?
Sure, of course. That first syndication that I passively invested in, it was 104-ish units or something. The previous team saw a 1-unit studio unit and a studio unit and decided that if they drilled a hole and put a spiral staircase, that they've got this really neat duplex type unit. Well, what they actually did is they took like a $500 rent and a $500 rent and made a $700 rent. So if you're looking at a net operating income, what you need to do is maximize the dollars that you can collect in rent. And if you go from 500, 1,000 to 700, you went the wrong direction, right? So the business plan was basically just to uncarve all of those mistakes that the previous team had made, put them back into serviceable 2 units for each duplex type thing. And it would then be 130 units, which boosted the NOI like crazy. And we were able to exit that asset making, I think we doubled our money in 2 years time, just by executing that business plan, because NOI went through the roof when we brought more units online.
And that's the power of syndications, right? Like you can double your money or even sometimes more than that by just proper management. If you have the right systems in place, you grow to scale, you're raising the rents. I've seen some great, and Diego and I are starting to get into some syndication stuff as well. So we're excited to hear the story.
If it's the power of multifamily, right? In my opinion, the bigger returns, I call myself an equity hog. Sometimes I want to own as much of an asset as possible. So things that if you're considering getting into syndication, it's a wonderful mechanism that's going to help you get to goals depending on what your goal is. Understand that this last deal that I did, 104 units, I brought $1 million, and I'm doing a bunch of the due diligence, and I'm doing asset management. What percentage ownership of that overall deal do you think I have? Just take a guess.
Diego?
Well, if you say you brought $1 million,
I helped raise $1 million from my friends and family. Mm-hmm.
So at that point, you're a general partner, potentially.
I am. Okay,
yep. Cool. See, I know a little bit on that.
You got
it. And I would say maybe 20%.
What do you think, Felipe?
I was going to say 25, 30.
Of the overall deal? Of the overall deal, I own 1.9%. So understand that if you're talking to people who are syndicators, they make a big fee on the front end, they make a big fee on the back end. But in terms of that cash flow that goes to my bottom line every single month, I get 1.9% of what that throws off. So it's a different type. It's a job. It's a different type of a job. I just got out of a job. I don't want another sales job. You know what I mean? So make sure that you fully understand what the end is before you start approaching, because it looks sexy, right? Like that, I've got 300 million assets under management. Well, you know what retired me? My 22 doors, not the 300 and whatever I've got in syndication.
That's interesting because I'm the same way, and we teach this in Rat Race. A lot of people ask us like, hey, should we go short-term rental stuff? Should we go flipping, wholesaling, syndications? If I'm an accredited investor, should I do this? And I always tell them the same thing. You got to reach 5 first. You got to have financial independence through passive income of real estate. Before you try anything else, that's my goal to everyone that I talk to. You got to have your core fill in the blank doors. For me, it's 18 doors, and those doors have retired me and my family. I can sit here at 2:00 and do a fun podcast because I now know that my rental will cover my expenses at bare minimum, right? I mean, I'm not driving a Ferrari on those doors, but I also don't have to yet. Well, actually, I just bought my dream car of my Tesla. So I do have my Tesla. But what I'm saying is like, those doors have provided me the freedom to go and look for syndications or short-term rentals or do my Rat Race mentorship and, things of that nature. So I tell people the same thing. You got to reach 5 first. You have to build your foundation before you do anything else. And that is the most important thing before you start playing with your money. Build your foundation for you and your family.
And I think too, like pretend you're a syndicator, because that is the way you're approaching trying to get out of your day job, right? Like if you basically, the bulk of what you're paid is an acquisition fee and a disposition fee on the front end and then one on the back end, right? So I would ask some of my friends kind of coming up through the multifamily stuff with me who were syndicating, well, how will you know when you can quit your job? And they'd be like, well, I just got to do this acquisition fee and that disposition fee. And then all I've got to do is 3 deals a year or 4 deals a year. And then I can quit my job. And I'm like, but what if there's not 4 deals that are worth doing? Then you're doing deals that you have to do because you've got to feed your kid, right? Like if you've reached 5 before you go do a deal, or at least this is how I've approached it. My having reached 5 before going to do syndications mean that I know that I'm waiting for the very best deal rather than doing a deal because I got to feed my son.
Exactly.
Correct. I agree 100%.
And also like, you don't know what's going to happen in 4 years or like in 3 years or whatever, right? So it's like, there's that like success leaves clues or whatever, like history. But at the end of the day, you don't know for that particular deal if it might make more sense for you to actually sell it next year or like a year later because you're doing certain types of renovations, or maybe you thought that maybe you could update the roof on all of the things in a year, but it's actually taking 2 years. So your like all of your numbers make better sense to sell it a year later, and you are already trying to get rid of this deal so that you can feed your family. And that is not a good position to be in as a potential GP, because then at that point you feel like the GP potentially is like trying to sell you. It works the same thing as a realtor. It's like, when the realtor is convincing you to buy that house because they need that commission in 30 days, right? You feel that salesy.
Well, I mean, I've been a sales rep for the bulk of my career, right? Like I show up with a different energy if I'm knocking it out of the park versus I am not hitting my number and my boss is telling me to do weird stuff. Like it's a different energy, it's a different focus, and it's a different willingness to like overlook things that you wouldn't necessarily, even as a totally full of integrity person, you might like, oh, maybe this exit cap won't be a 6, maybe it'll be a 5.5 in terms of my underwriting, so that I can take something. I'll take bigger risks if I'm under the gun.
Another thing for me, Mandy, that I would say is I think it's a little irresponsible to ask for partnerships, be in syndications, or maybe partner with people on flips or whatever if you're not financially independent. In that, the last thing you want to do is say, "Hey guys, we got to sell early because I got an emergency," or "Hey, I need more cash flow," or "I got to sell my position." Right? Like it's almost it's irresponsible if you're gonna bring a partner. When I look for partnerships and I talk to people, I'm interested in like, yeah, how good the deal is, but I'm more interested in you as a person. Are you financially stable? Are you independent of a job, or are you like if you lose your job tomorrow, are you gonna want to sell this position? What's our exit strategy here? So I think financial independence is kind of like where the Bible says love covers all sin, right? It's like if you can reach financial independence, then we're probably going to be okay in a lot of deals because we're not going to be stressed about having to exit the position because you have a financial strain or I have a financial strain. So I think it's responsible of me when I come into a syndication, when I come into a deal, when I offer money, or when I call Diego at 11 p.m. at night because I have a business idea. He knows that I'm financially independent and that I'm not going to be like, "Yo, we got to sell tomorrow. I'm sorry because I'm hurting, fill in the blank here," right? Now, things happen, '08, emergencies. But if you're financially independent, you're probably going to be more of a responsible investor, and that's what people are looking for. So add that to your tool belt before you're doing a bunch of other stuff.
You got to take care of home before you can take care of anybody else.
I see all these investors on Instagram. They're like, "Oh, I'm going to do short-term rentals first, and that's going to give me my financial independence." And I'm like, my friend, like, I get what you're saying, and there's high cash flow, but there's also high risk and things like that. So like, I'm always like, dude, please reach 5 first before you do anything else. Like, that's just responsible for your future business partners that you don't even know yet. We just went on a tangent there, but I think everyone listening is going to appreciate that.
Yes.
Now, question for you, Mandy. What was that feeling of like because of my passive income, I reached financial independence and now I have the choice. Like,
oh, I like that.
Yeah. Like, what was that feeling of like, now that I hate my job or whatever, like I hit that story, right? It's sort of like, I don't need this. I have the choice to leave and do whatever I want.
It was kind of interesting. So kind of the first step was that job where I had kind of the questionable boss. They were going to promote me to a director level, or I was going to take a job with a different company that was a huge step back that would give me way more time. Well, I chose, rather than the promotion, to take a huge step back. And in so doing, like, it kind of helped me, like, it was basically half the money. So it helped me kind of see what it was like. Like I really am just living off of my income from my properties. And then, like, I realized I kind of arbitrarily just had this idea of $15,000. That's what I need. And then I can quit my job. Well, I hadn't ever done the math, and I think that there's a lot of people, and this is kind of when I went down that FI rabbit hole, that you just got to do the math. And there's a bunch of different levels, in my opinion, of financial independence. There's, I'm going to pay my mortgage and eat, and my kid will survive if I lose it all, right? And then there's everything is covered, and then there's everything covered with a buffer, and then there's I'm buying the jet. You know what I mean? So I want to understand what each one of those levels are. I made a little calculator. I'll share it with you guys. It's just an Excel spreadsheet because it helped me figure it out. I don't need $15,000. I need like $8,962.25. to feel good and have that choice, right? But the big piece of what helped me get there was, I mentioned medical device sales. Like I supported cases. Like I would run all over. If Dr. So-and-so at this hospital decides he wants to put this heart implant thing in, I got to drop everything and run to that hospital to support that case. Not a lot of like concentration or deep work can happen in order to move forward a portfolio in that case. However, COVID was this tremendous, you might have heard of it, was a tremendous blessing to my life, because I got to sit in this chair for 3 full months because they completely locked down elective procedures, which mine was one of. And in those 3 months, I figured out the math on that. Oh my God, I can actually leave. And not only that, did 4 transactions of 3 single family homes and a multi, and made more than twice what my day job was going to make in the year in those 3 months. So if I prove to myself, if I give more focus to this, wow, I really should be betting on myself, and I have the choice that everything is covered. So COVID was a real gift to me.
You know, there's 2 things in this, in what you just said. One, your FI number is not as astronomical as most people think. When I reached FI in 2020 at the beginning of the pandemic, with which, by the way, the pandemic was also a blessing for me, so we can talk about that. But FI, I was like, no, I need like, maybe $10,000, $12,000, $13,000 a month. If not, like, it's just not going to work. And I'll never forget, it was like February or the beginning of March. My wife was like, I think we've reached financial independence. And I was like, what? What do you mean you think? And she's like, well, so she starts pulling up the spreadsheet and she's like looking, and she's like, well, between $5,000 and $6,000 is our average monthly spend, and you're making about $7,600 in passive. I think we're okay. I was like, no, babe, there's no way, because like, and I just kept like making excuses of like, no, I got to keep working because there's more that needs to be done. And my wife was like, not only have we reached financial independence, you've passed it by $1,000 a month average for the past 6 months. But if you stop being a mover, which I had a moving company, if you stop moving, like if you put the business down and you focus on rat race to financial independence, your mastermind, and you focus on building relationships to buying more real estate, I bet you could double, triple this in the next year. And she's like, we're going to be fine. And she's like, plus we're in the pandemic. Like, what the hell are you supposed to go out and do anyways? So I was like, okay, you kind of got a point there. And then to your second comment where you talked about the pandemic, we have noticed that 2 people came out of the pandemic. Those that like took it and got hurt and like are barely now up and coming again because of work, or like just stayed home. And those that took advantage of the situation to the max, like bought real estate and leveraged and built relationships and educated themselves. They just used the time super wisely. Tell us about how you used your time wisely to like better yourself during and after the whole pandemic.
Yeah, so much of it was I saw all this opportunity and I would have to say no because I couldn't follow through, because I had, my time was committed. I was still working 60 hours a week chasing these procedures around. So just a chance to sit still and pursue the stuff that I had always seen in front of me. Like that's what it was. But I will say too, like to your point, kicking the can down the road, like once you, like the chase of financial independence, right? Like it's just like the chase of lots of other things that once you get there, you're like, the dog that chased the car that caught the car, you know, like, what do I do now? You know, like I know that feeling. And I feel like that's probably pretty common. And I could have stayed in my day job for a lot more years and been fine and continued to grow my portfolio, would have been a lot slower. But here's the thing that happened. I got a chance to serve on a panel at a boot camp of like 800 people. And, a colleague was in the audience, and basically I said, hey, I hit my financial independence. I'm basically going to leave my W-2 in Q1 of next year, whatever. And long story short, my boss left and there was a bunch of shuffling, and that guy who was in the audience who heard me say that became my boss. So he calls me like right after. He's like, hey, that thing you said on that boot camp, is that for real? Because I need to think about like hiring somebody else if that's the case. And so it went from this idea that was interesting and cool to like, oh my God, the baby's coming. I've got to do something about it. Right. So I don't know without that push from the universe if I would have taken that jump, because, you know, trusting yourself is a hard thing to learn.
Diego and I always say in Rat Race about putting it out in the universe, and I'll let Diego talk more about that.
Well, sure, Felipe. well, at the end of the day, it's one of my beliefs that is like the frequency and the things that you share, that you put it out there, the universe is going to work for you from that perspective. And it's up to you to take advantage of those opportunities. And if you're doing it right, it comes those push, whether you sort of like were expecting it or not, because it's just going to flow. And right. I feel like that is what helps a lot of people take actions, like that extra push that you needed.
The baby was coming, right? So no, I totally get it. I agree. Putting yourself out there and saying it kind of made the universe, like you said, Diego, work in your favor versus against you, where sometimes we feel. I guess, Mandy, my next question is like, what's next for you? Where are you headed? What are you doing? More syndications, or, you know, what's next?
So one thing that I didn't anticipate in my first, like I've been self-employed for a full quarter now. And I didn't, like, this is not something that I anticipated, but remember how I said, like, I saw this opportunity and I just wanted to do it all, right? So, you know, if you're starving and you go to the Chinese food buffet, you get way too much food and you take on way too much opportunity if you're starving for it. And then after the end of the first quarter, I ended up bloated of lo mein and MSG and opportunity. You know what I mean? So I ran way too fast. So one thing that I'm working on now is dialing it back. Like, the reason that I am leveraging financial independence and I chased it for so long, so hard, is because I want to be the mom that goes on the field trips. You know, like, I want to get my kid off the bus every single day.
Now,
does your kid want you to be the mom that goes on the
He's
trips?
5, so he still likes me. So I'm gonna enjoy
Take advantage of it for now. Yeah,
I know. I got a couple of years till he realizes I'm annoying, but
or not cool.
Yeah, not cool. But so that plus, I feel strongly that you're given two arms for a reason, right? Like, one to pull yourself up, but then the other one to pull other people up along with you. You know, two arms to pull yourself up, and one to pull other people up with you. I started a women's group, Aspiring Women Achieving More, and we're mostly real estate investors, and just it's focused on the whole woman, because so many of us are moms. So many of us deal with that analysis paralysis that comes with, we need to be perfect and have 100% of everything to move forward. So that's been super fulfilling. And then the pull myself up thing, I joined a mastermind called GoBundance, which was tremendously life-changing, you guys. Like, the chance to be at a table talking about anything life with someone whose company was just valued at $12 billion, a different set of ideas comes from that person than, you know, my Uncle Joe lost his shirt in real estate, you shouldn't do it. Like, it's a different conversation if you involve yourself with that. And because of that, I'm partnering with a woman who has a short-term rental property management firm, and we bought an 18-unit motel. So we're going to run it like a short-term rental, and nice. Really excited to see where that goes.
That is awesome. That is awesome. So I've been part of GoBundance since 2014, and back when there were only like 35 people. And that has been instrumental for me on my journey to achieving financial independence and being an investor and all of that.
They just started the women's division like 2 years ago now. I was member 36. So it's really neat to kind of see our progression. And it's just, you know, it's a different conversation altogether when you're with people who are like-minded.
Yeah, that's awesome.
We talk a lot about that in Rat Race, about finding your tribe, finding your people. It's important because, like, some of my best friends are not real estate investors. One is a stay-at-home dad and one drives heavy machinery, and we don't talk real estate, and that's okay. But because they're like my exit, like, we don't talk anything business, but like, you got to have your tribe to keep you accountable to your goals and your real estate and the things that you're going to do. Mandy, I think earlier you said that you're a single mom. You're in real estate. It sounds like there's a lot of hard things against you than other people, and you're still crushing it. And I would say partially that is because you did find your tribe. And you're doing awesome. And not just that, like you said, with your other arm, you're building a tribe to help other people, which it puts you in a perfect position for success, right? You're putting yourself in a position with high-level individuals. You're putting yourself in a position to help other people, which I think is awesome.
I think too that like these hard things, that everybody's got hard things against them, right? Like I firmly believe that, but I've made the decision, like just the life decision, that the thing that sets me apart that's hard, like being the only woman in the room in multifamily conversations, well, you know what? People will remember me. That is a competitive advantage in a world where everybody is clawing for attention. So I kind of, flipped that around and decided, if I've got sellers that are getting 1,000 yellow letters on their, 20 unit property, how am I going to stand out? Well, I made a mailer that was my kid that says, when it's time to sell your apartment building, pick us. And it's my cute little 2-year-old at the time picking his nose. You're going to remember that because I call myself the cash flow mom,
That's hilarious.
How do you take the thing that is the hard thing against you and make it a competitive advantage? I promise you can.
That's amazing. Wait. For those that are watching this on YouTube, you got to bring that back up. That was the cutest thing I've ever seen in my life.
And another hack, he was my model and I got to pay him.
Oh yeah, you got to write it. I was just about to say, you got to write it off.
Heck yeah, I did.
That's hilarious. Oh my gosh, I love that. For you guys that are not watching, go to our YouTube channel. You'll see Mandy. She's got a picture of her baby up picking his nose, and hey, pick us whenever you're going to sell. And you're right. That would probably be one of the ones I'm like, I'm going to keep this. This is pretty funny. Or at least I'd call you and be like, Mandy, where the hell did you get this idea? And then that conversation would start. So it would definitely work. Mandy, you've spent an hour with us. Thank you so much for everything you're doing, impacting women, helping other investors and everything you do. I was raised by a single mom, so I have like a heart and a passion for single moms taking action, getting out there, putting yourself in the world and investing. In Rat Race, we definitely encourage everyone, but especially women in real estate, to go out there and do your thing. Mandy, my last question is: was there anything that you wish that we would have asked you, or that you want to tell the audience from a real estate business or investor perspective?
It's a life thing. It's an investing thing. It's a mindset thing. Mindset is everything to me. That you got to be really careful with what your thoughts are, because your thoughts become words, your words become actions, your actions become habits, and your habits become your life. So start where it's easy. If you're saying the negative self-talk stuff, like get rid of it. That's where it starts, because if you're not believing in you, then who's going to? So
I love it.
Yeah. So, Mandy, my last question for me is, where can people find you?
Thank you. The best place to find me, the catch-all for everything that I do, is mandymcallister.com, MandyMcAllister.com. It has information on the Aspiring Women Achieving More group. Also, Good Fortune Capital, which is my syndication investment arm, and all the other shenanigans I'm up to.
Cool.
That's
and
amazing.
For the audience too, what is your Instagram?
At Ms. Investor Agent. There's a link through the website too, if that's difficult.
Perfect. Awesome.
I just typed in Mandy McAllister on Instagram and it pulled up. So
good.
That's perfect.
Yeah. And you have great content too. So
Thank you.
Well, Mandy, thank you so much for your time. Again, that's it for Diego and I. Mandy, have a great rest of your day, and we'll hear you next time. Bye.
The Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place.